What's up, everybody? It is Tuesday, February 15th. What's going on? So we had a Russia rally today. News broke, and this is a great story because all we've been hearing recently was there's going to be an imminent attack. There's going to be an imminent Russian invasion of Ukraine. I mean, the White House has been putting that out. Jake Sullivan, National Security Advisor, the media, it's all over yesterday. CBS News market tanked because CBS News said we have satellite photos of Russian troops, getting ready to invade. And I've been calling BS on this whole thing for a long time. And then early this morning, it was reported all over that the Russians were pulling back some troops from some of their locations, and we had, boom, a big market rally, a relief rally. Now, I don't think that the White House, I don't think that the Biden administration is going to give up on the pressure or pressuring Russia to invade. First of all, I think this whole thing by Biden is an attempt to divert attention from the inflation story, where he's taking a lot of heat on that. The Democrats in general are taking a lot of heat from that, and it's looking like they're going to lose the midterm elections badly. They're going to lose the control of the House. They're going to get more seats in the Senate. I mean, it just looks like it's going to be a disaster for them. So Biden's trying to divert attention away from inflation and trying to look like the tough guy, keeping the pressure on Putin. So I don't think this is going to go away. And what I mean by that is I think that the administration is going to continue to apply pressure. As a matter of fact, Biden spoke earlier, and he came out very tough talk again. We're going to defend every inch of NATO soil. If Russia goes in there, it's going to be bad news. So they are definitely pressuring Russia to invade. And, I would also say that the risk of some kind of false flag event, which would cause Russia to go in, is very high. So don't think this element, this Russia fear element, is off the table. I mean, today we had a strong rally, a strong bounce back on a relaxation of those fears. So you had a pullback in gold, you had a pullback in oil stocks, were very strong. But I don't think it's going to go away. I think that, this to me is like the Trump trade war stuff that we went through 2 years of that, where, one day the trade war is on and there's going to be tariffs. The next day, the talks are going well. I mean, this went on for 2 years, and it created a lot of headline volatility. And of course, I was telling everybody, you got to buy the dip. You got to buy the dip. You got to buy the dip. Same here. Look, a war would be awful. I really hope it doesn't come to that. I think Russia is achieving its goal of keeping Ukraine out of NATO for now. I don't know how long that's going to last, but I think for now, there is absolutely zero chance of Ukraine joining NATO, and that was really Putin's goal all along. Also, he wants to be sure that the eastern part of Ukraine, the Donbass region, the Russians living there are safe. I mean, if there is an incursion, if the Ukrainian army moves into Donbass, then yeah, I think, it's on. But for now, it's a stalemate in that area, and I think that's how it's going to remain. Let me talk about the markets now. All right, we still have very strong fiscal. Okay, today I believe the daily treasury statement for today, we'll see it tomorrow, but I believe we got probably like a 42 or a 44 billion quarterly interest payment. And that may also account for some of the buoyancy in the market. I've said this many times, that if you understand the daily treasury statement, and if you follow these very regular patterns of these flows, they're monthly, they're seasonal, they're quarterly. These things are very predictable because they're regular payments that go out, and some of them are very, very big, like today's $44 billion in that quarterly interest payment. Those things affect the markets. Same thing with, big days that have tax payments or public debt issuance. Those things have an effect on the markets. So again, I have my course, Understanding the Daily Treasury Statement. It's on my website, pitbulleconomics.com. If you want to get it, it teaches you in a video course how to parse through these numbers and just having a much greater knowledge of these daily flows that have a direct impact on the markets. I mean, these things are literally tradable, okay? So we still have very strong fiscal flows. Now, there's another thing going on here that I think I'm pretty much the only one who's been talking about this. Companies have seen huge increases in their pricing power. Okay, there was one piece of data released today. I forgot which one it was, but it showed like record level of prices received by firms. Not prices paid. The prices paid was stable in this report, but prices received, record level of record increase of prices received. So companies now, firms have like, unprecedented pricing power. Remember, I've been saying that an inflationary environment, there's going to be winners and there's going to be losers, okay? As consumers, we don't like it because we have to pay more. But as producers and businesses, they see increased pricing power, and that is income that flows to them. I've said this so many times, the income doesn't fly out into outer space. It stays in the economy. It gets redistributed. So there's going to be winners and there's going to be losers. And what I suspect is that when we see first quarter corporate profits, all right, we're not going to get that until April, but when we see first quarter corporate profits, they are going to be huge. And with that understanding, it just seems like the stock market is really, really underpriced right now. I mean, we're going to see a boom in corporate profits. I think I spoke the other day about the huge inventory build that we saw in the fourth quarter of 2021. I mean, that supply of inventory is going to be sold at record high prices. Consumption now is still very high. All right? Consumption is being supported by bank credit, not so much by the fiscal anymore, because, a lot of these supportive fiscal flows like the child tax credit payments and the enhanced unemployment benefits, those are gone. But as I've been pointing out, we have been seeing very rapid increases in credit card and revolving credit loans. And that is helping to support retail sales, consumption in general. So you have this huge inventory, which originally I thought that was going to be a big overhang, but now I'm starting to think because of bank credit, keeping consumption supported, record pricing by firms, I mean, profits are going to be huge. Profits are going to be huge. Now, again, if you are on the negative side of the inflation story, which means, and most all of us are, we have to pay higher prices for stuff like food and this and that. Take advantage of at least the fact that, the stock market is going to be very strong. Maybe some of you don't like to hear that. You think like, oh, that should be bad too because my situation is bad. But if you think like that, you only shut yourself out of opportunity, or at the very least, a way to protect yourself, at least partially, from the price increases that you may be experiencing. I mean, we're going to see a record profit boom in the first quarter because of this pricing ability now that firms have. And again, I know you may not like that, and you may think that's not fair, and you got to pay higher prices, but you know, it is what it is. It's like in a deflationary environment, it might be good for consumers, but firms lose pricing power. They lose their profit margins shrink. You get some elements of the economy like commodity producers, farmers. It's terrible for them. They go out of business, they go bankrupt. The important point to remember is whether you're talking about an inflationary environment or a deflationary environment, the income doesn't fly out into outer space. It gets redistributed, and if you're smart, you take advantage of that, at least to some extent, to offset. You know, this is what commercial firms do when it comes to hedging, all right? When they feel like profits are going to fall, or the price of their goods or their commodity is going to go down, they hedge. They find a way to protect themselves against that. You as a consumer have the same opportunity through the stock market. As a matter of fact, it's well known that stocks are an excellent hedge against inflation. So instead of crying about it, you know, try to take advantage. I'm here explaining it to you. We are going to have a boom in corporate profits in the first quarter because of this unprecedented amount of pricing power that firms have. The stock market is not reflecting this right now. It's all caught up with the freaking Fed and interest rates and this ridiculous war that Biden keeps pushing. I mean, but the market is going to go higher, and you can take advantage of that, or you can just say, "Oh, poor me, I'm getting hit by, you know, inflation." We all are, but at least do something to offset some of that. We're going to have a big boom in the market. So that is the update for today. Once again, if you're interested in an individual subscription to MMT Trader, send me an email at mnorman@pitbulleconomics.com. See everybody tomorrow. Bye.